Welcome to Leading Voices, and so glad to see everybody here today. I'm Laura Nix-Gerson, Director of Women in Worth. We're delighted to welcome you to our monthly series featuring groundbreaking women like these incredible women here today from our community who are leading the charge when it comes to building a more equitable economy for women. Today on Leading Voices, we're talking about one of my favorite topics, which is investing in venture capital. And it isn't as intimidating as you might think it is. And we're seeing more and more growth in the investing community as more and more women are becoming angel investors, limited partners, and general partners. So what exactly are those investing roles and what kind of opportunities are available to you if you're interested in investing in female founders or female operated funds? So today I'm joined by 4 powerhouse fund managers who are currently raising funds and are looking for the right LPs to invest in their funds. And we pulled this together. Amber and I were chatting and we were talking about this, what a tremendous opportunity this is to bring the 4 of you together and share with our community the work that you're doing to move the needle forward and to really make a difference when it comes to investing in diverse founders. So today I'd like to welcome Amber Illig, General Partner of the Council Fund, Gale Wilkinson, Managing Partner of Vitalize VC, Tessa Flippin, founder and managing partner of Capitalize VC, and Lindsey Taylor Wood, founder and GP of the Helm. Hi, ladies. We're so thrilled you're all here. And to all of our attendees, as we're going along with this conversation, please post in the chat any questions you might have. We will definitely address them as we get closer to the latter part of the conversation. So delving right in, let's talk about this. Like, what do we mean by a venture fund? What is a venture fund? Amber, you want to take this one?
Yes, absolutely. So a venture fund is really analogous to an index fund. So if you invest in like VT or some sort of total stock market index in the public markets, you're investing obviously in a bucket of companies. And so a VC fund is very similar in that you're investing in a bucket of companies, and all funds have different strategies. So they might invest in 15 companies, or they might invest in 100 companies. I see a lot between 30 and 50. And they all have different strategies too. So they invest at various stages, but in the private markets. So before companies have gone public. And part of the reason you would invest in a venture firm is because it is a riskier asset class, but it has the potential to be a much larger return by potentially multiple magnitudes of what you would see in the public markets. So there are very early funds that, like mine, that focus on pre-seed before there might even be revenue at the company. And then there are Series A funds where there's a lot of data in these companies already, and they're off the ground. And so just comes down to like the level of risk that you want, the level of return you're looking for, and what the strategy of the fund is. But that's essentially it. It's a bucket of companies in one vehicle that you can invest in the private markets.
Wait, and let's back that up a little bit too, because you just mentioned different time frames of investing. So if you're looking at investing in founders in the venture community, there's phrases out there in the marketplace like friends and family, seed round, Series A, Series B. Can you elaborate a little bit on that and kind of explain what each of those things means? Anybody want to jump in, Lindsey or Tessa?
Yeah, I mean, I would just back up a little bit and say a venture capital firm is really just a pool of capital that we go out and raise from people who are called limited partners. And oftentimes those people are high net worth individuals. Those people can be, or those entities can be family offices who are managing the wealth of multiple families. It can be corporates who have capital to invest through a venture capital firm. It can be financial institutions. And so we go out and we raise capital from those people. The size of the fund varies. And then, as Amber was just saying, we invest it in whatever our respective thesis is. And that can be a multitude of different things. That can be female founders, for instance, which is our thesis at the Helm. It can be early stage companies. So it might span pre-seed to Series A, which is really I think, Laura, to answer your question, sort of where the company is in their growth trajectory. Are they pre-revenue, as Amber said? Do they have some sort of product market fit, which tends to be more around a Series seed? Are they growing their company, which tends to be around a Series A? It could be by industry, which it means a fund could be interested in investing in something like healthcare. And you can cut that as many ways as you want. It could be as generalist as you want. It could be as specific as you want. And then hopefully over 5 to 7 years, I actually think it's closer to 10, but venture capitalists tend to be scared of saying that out loud. Those companies have some sort of liquidity event. And that's when you get your money back. And to Amber's point, even though it's a lot riskier, the ability for you to make your money back in spades by a multiple of, we hope at the worst case scenario in venture capital, it's 2.5. And at the best case scenario, it's hundreds if you've got an Uber in your portfolio. That you then make your money back. So the sort of risk reward is that it's tied up for a really long time, but you have the ability to make a lot more of it. And I also think it gives you a lot more agency to align your capital with your values in terms of where you want to direct that money, and to be sort of a more attuned steward as to how you are creating wealth for yourself and hopefully your family and future generations.
Well, and you did touch on that too. Oh, sorry, Tessa, go ahead.
Oh, I was just going to say, I'll just add that like a venture capital fund is typically for limited partners to invest in when and it's called a blind pool. So like they're investing in the fund manager and the fund's thesis, and they don't get to choose like what the fund thesis is or how that's deployed, and like what companies get investments. So I think like that is a huge difference between investing in a fund versus investing as an angel investor. And Laura, you mentioned friends and family, and I would say that typically venture capital is coming in after a friends and family round, when a company is a little bit more legitimized with traction, and potentially a little bit bigger of a team. And so if you're interested in, choosing the investments that you want to make, I would say angel investing is a better path for that. But when you invest in a fund, you are usually investing in a blind pool.
Right. And you're looking to the general partners in the fund to really drive those investment opportunities.
Exactly.
So let's talk about that role. Let's talk about the general partner role. It's an interesting thing. Some of you, your titles are managing partner, and some of you are general partners. So maybe you can talk to us a little bit about that as well.
If the LP is the fund, and that's the bucket that we've been talking about, the pool, where we're making individual investments out of that pool of capital, what sits on top of the limited partnership is the general partnership. And that's the entity or the group of people that make the decisions on behalf of the limited partners. It's somewhat interchangeable with the term VC or venture capitalist. So a GP is just a venture capitalist that is managing that fund, because other venture capitalists might be more junior who aren't in the general partnership. And the general partnership has ownership of that entity, and typically also invests into the limited partnership alongside the limited partners, to the tune of 1% to 2% to make sure that we have alignment with our limited partners. So it's really just the management of. And if you hear managing partner or managing general partner, that would be the person who's leading the ship at the general partnership, whereas a general partner is a member of the team that is involved. If you hear the term partner, it might be somebody that is not in the general partnership, or it might be, and they just call themselves partner. So it's really kind of confusing. But anytime you see general partner, it's just denoting that this is an individual who is managing that limited partnership.
That is such a great explanation. As I've been out talking to women and, they're asking me questions about venture, I said, let's do this. Let's just break this down and talk about all of these terms, because I think sometimes when the terms are out in conversation, people who aren't currently investing in venture or just thinking about investing in venture, those just knowing what all of the terms mean and how it functions is super helpful. There's the other piece of it, which is being an investor. So when you talk about being a limited partner and investing in a fund, first of all, you have to be an accredited investor. So, I'd love to talk about that. And then I want to take the second piece of that, and let's go back to what Lindsey was talking about. And, typically who are the investors in the fund, and what opportunities are there? What opportunity is there for you to be able to invest in a fund? So let's start with being, what is an accredited investor? What does that mean? And I'm going to ask Tessa to jump in here.
Accredited investor is really a label that the SEC has given to people who have the level of wealth required to invest in venture capital. And so you are automatically considered an accredited investor if you fit kind of one of two buckets of your income or your net worth. And so when we look at the income side of things, you're considered an accredited investor if you make over $200,000 a year as an individual in like your salary. And if you're not married, if you are married, then between the two of you, you have to make at least $300,000 a year for the last 2 years. And you have to be able to say, I realistically think I'm going to continue making this in the future. And so that is how you qualify as an accredited investor with income. You can also qualify as an accredited investor with net worth. And that is by having over $1 million in net worth, not including the current house that you live in. And so if you can prove one of those two things, you would be considered an accredited investor. You don't necessarily even have to prove it, to be honest, though, because a lot of funds use 506B, which is, again, kind of a designation by the SEC that says that people can self-qualify as an accredited investor. So it's not like you have to go out here and like take a test. You don't have to, fill out a form. You just become an accredited investor. When you go to subscribe to these funds, you check the box that you are an accredited investor, and that self-designation allows you to become an LP in that fund. Now, there are other funds that use the 506C rule, which means that and Capitalize is one of those funds, which means that we have to verify that you are accredited. And so we require that your accountant or attorney like signs a form that says that you are in fact accredited and you are able to then invest in the fund.
Do most of you do that?
I do the 506C fund as well.
You do this at 506C fund as well.
And the main, you may mention this, Tessa, but the main advantage from our perspective is that we can publicly talk about the fund more if we qualify as a 506C fund. And so by going through that extra step with all of our LPs, it enables us to do that.
That's great.
I'm not, so I'm not really raising.
Got it.
I just wanted to add, there's one more, I feel like I'm unable to recall all of the details, although I would not be surprised if one of my, my colleagues here knew the answer, but I think there was just another, tier added to the accreditation, and it's if you have institutional knowledge as an investor yourself, if you're working in the industry. I think there's some sort of accreditation or certification, it may be self-selecting as well, that allows for you to, if you don't meet those thresholds, both in terms of net worth or in terms of income. And again, I can't remember the specifics around that, but I know that was recently added, I think in the last 2 years.
Yeah, so I do want to say that there is like an entire list, which is super easy to Google. Just Google like how to be an accredited investor. And there's like a list of probably like 7 to 10 different ways, but those two that I mentioned are the most typical that we see as GPs. But if there are, if you're interested in the other ways, I would definitely just say do a quick Google search, and that will help get you some more information.
Yeah, that's great. So, and really my understanding is that the SEC has set this up in order to protect investors, to make sure that, when they're looking at investing in the private market, that this is an opportunity that's going to be a gain for them. And, because there is a little bit of risk involved in investing in any market. So you have to be more aware of it, and it's just to set those boundaries. Well, okay. And then I really want to get into your funds and start talking to you about what you're doing. But before we do that, my last question is, talk to me a little bit about due diligence and because the reason that an individual becomes an LP in a fund is, there's many reasons, but one of them is that your team, you guys are reviewing the opportunities, you're doing all the work to make sure this is a good investment opportunity, and, have vetted everything, right? So and what's involved in the diligence process? I mean, I think everybody kind of has different diligence processes, but on an overall basis, like Amber, kind of what's the process you guys go through for diligence?
Yeah, absolutely. So we invest very early. It's considered pre-seed round. So sometimes these companies are pre-revenue. Sometimes they've just gotten their first few customers, or maybe they have their first 100K, in annual revenue coming in. And so at that stage, things are very early. The team is very small. The business model could still change and move in different directions. And so a lot is really depending on the founding team that you're backing. You have to believe that these people are the people to drive the ship. And if they come across an obstacle, they're going to know when's the right time to pivot and they're going to go in the right direction. And so I spend a lot of time making sure that the founder and the people that they've surrounded themselves with, especially co-founders, are really strong. So I spend a lot of time like digging into how do they know each other? How long have they known each other? Do they have clear roles and responsibilities? And then I go through kind of my typical checklist of founders themselves in my first call with them, which is mainly I'm looking for three things: resilience, vision, and mission, because the vision and mission, I think, are going to keep them going. The mission is going to keep them going if they have a personal tie to what they're building versus just trying to make a lot of money. And then the vision is really important because I'm not looking for get rich quick schemes, because if they're looking to exit the company in like 1 to 2 years, we probably won't see a huge markup on it. But if they are willing to grow it until it gets to acquisition stage or IPO stage, that could be huge. And then their resilience. I just want to make sure they've been through operating experiences before that have given them thick skin, and they're going to be ready to navigate those obstacles. Once I've tackled that and I'm like, this is a founder I would love to back, and they're operating within my thesis of B2B software in legacy industries. Then I get into like a whole checklist of items, and there's like 20 different things. And a lot of them are already in the pitch deck or came out in the first conversation. But sometimes there's some follow-up questions like, what's distribution going to be like? What is their target market? Are they going after enterprise or mid-market or small business? And do I really believe that they can graduate to the next tier and get this entire market that they think they can? So really diving into those things kind of on a second call, and then even outside of that call and researching that is important. And then I like to research the market, make sure that it is, a lot of them are pretty obvious. It's like, okay, logistics is a multiple trillion-dollar market, but if it's not an obvious one, I'll spend some time researching that. And then I tend to pull in an expert. So I lead an operator community that angel invests alongside the fund in select deals. And we have experts in different areas like healthcare and legal and, anything product related, engineering related. And so sometimes if there's an industry, like a newer industry that I'm not as familiar with, or a function that's going to be really critical to this company being successful, I'll pull in one of those folks. So like one of my LPs, for example, was the CTO at Guild Education for 6 years. And so I was looking at an ed tech company. And so I pulled her into the second call with me, with the founder, and had her ask some questions and kind of battle test the deal a little bit. And then we chatted about it offline and made a decision. And so that's part of diligence. And then I also, if I get to the point where I'm like, I want to invest in this company, I believe in the founder, I now have gone through my whole checklist of items, and I've, crossed my T's, dotted my I's, battle tested the deal. Then it becomes about like reference checks. So I think it's important to look at reference check for sure, and sometimes also a customer call. So I'll try to find somebody who's worked with the founder before and knows them personally, ideally off of their reference list, like not one that's on their reference list, to see what they're really like to work with, and make sure there are no red flags in their past that would prevent them from being a successful founder of this company. And then sometimes I'll do a customer discovery call too, even if they don't have customers yet, or I can't find out who their customers are. I'll ask someone who could be a customer. Like I invested in a fertility company, so I talked with an OBGYN to figure out, like, would you actually use this for some of your patients? And so that helps a little bit, but there's still a lot of risk early on, because a lot of things could happen. More team members could join, things like that. So, yeah.
Well, and you've laid all this groundwork in doing the due diligence, and I know, and each of you is going to talk about your thesis and like really what you're looking at for your fund, but several of you have launched angel syndicates or angel groups outside of your funds. And I'm assuming it's because you've done the work, you've researched these companies, they're still good investment opportunities, but they may not be a fit for your fund, and you still want to help raise money and you believe in these companies. I'm assuming that's the reason for the funds, for the angel group. So tell me a little bit about that, like the Helm and Vitalize you guys have these as well. And the council, I believe you have one too. Capitalize, do you guys have an angel group as well, Tessa?
We don't have an angel group, but we do
Okay.
have a lot of LPs that kind of serve a similar position.
Interesting. And so anybody who's an accredited investor can be investing in your funds, but additionally can also invest individually in companies that you vetted through the opportunities you're presenting in your angel communities as well. Is that right? Is that how that works?
And we also allow non-accredited investors to participate.
Oh, that's good to know.
I've been involved in angel groups for about almost 12 years now.
Wow.
And it's a really good way for people who want to invest directly to get started. I suggest they definitely invest via syndicate or a group versus doing their own direct investment, unless they have really, really good deal flow. And if they have that, they're probably not asking for advice. They're just doing it. Or going straight to a fund, finding a place where you can park a little bit of money into a fund. Like those are the two paths forward. And the reason being, when you're involved in an angel syndicate or group, you get access to education and networking. And most importantly, deal sourcing is done by the syndicate lead, as well as the diligence that we've already talked about. So VC is all about sourcing, that's finding the deals. And then you have to screen the deals, that's due diligence. Then you have to pick them. And then afterwards add value. And the angel groups are set up so that that process can become seamless across a lot of people, which is really cool.
So cool. You guys have laid such amazing groundwork. Sorry, Lindsay, what did you want to say?
I was just going to add on to that and say, I think you sort of framed the question by asking, is it because you find great deals that aren't the right fit for the funds? That way these groups exist. And as you and I were speaking about earlier, that's certainly one of the reasons that we share deal flow with our angel community. If we see a fantastic deal and it's later stage, or it's beyond where we think we can make a meaningful contribution, or it's a business model that may not historically have been one that lends itself to the venture community. There are all sorts of reasons on that end and that spectrum that I think that still make a deal a great deal and one that's worthy of sharing with our community. But I would say two others that are really top of mind for us and were reasons for starting our group a few years ago. The first was that we launched our first fund in late 2016, early 2017, very, very early in the sort of female founder focused gender lens investing space. And this is like a whole nother conversation and talk, I think, but we found really early on that historically women would give their money away, but they hadn't been comfortable investing it. And so when they were sort of trying to find this on-ramp that felt comfortable for them, the amount that they had to deploy or wanted to deploy, or frankly, that just made sense financially, sometimes was not that of an LP or didn't meet the minimum requirement for a capital contribution for a fund. And so we felt really passionately about ensuring that we were democratizing access, not only for founders, but for funders, and making sure that everyone who wanted to participate had a seat at the table. And so I would say first and foremost, that was the sort of catalytic reason for starting the group. And then the third reason that I would say, the second, which we just spoke about, which are great deals that just might not be core to our thesis. The third reason is that it's actually a really fantastic way for us to support existing portfolio companies. And it also benefits angels because it's somewhat been de-risked, right? So we've already put our money into that company. We've backed that company. We've run diligence on that company. We've worked with that company on their growth trajectory. Often we are exercising our pro rata, so we are reinvesting into that company. And then we're allowing you to do that alongside us at a contribution level that is wildly lower than what it would have cost you to come along and join us as a limited partner, of which there are tons of reasons you should do that instead of being an angel and vice versa. So for us, I think it was really a way, again, to provide a lot of value to people who might not otherwise have been able to have a seat at the table, and to provide value to founders in terms of follow-on, and then again, to bring deals that we think are really exciting and may still have a meaningful return for angels, but maybe just didn't add up to the sorts of multiples we were looking for our fund at the table. So those are some of the reasons that we created our syndicate, and very happy to share more about that with anyone who's interested.
Yeah.
It's so great.
I'll just tack on to that. So the council actually started as an angel group for 3 years before it was a venture fund. And
Okay.
we chose to keep the angel group commingled with the venture fund for many of the reasons that Gale and Lindsey have just shared. But we actually started it originally because I was an operator working a full-time job at Cruise, wanting to start angel investing. My friend at Open Door wanted to do the same thing. My friend at First Round, who wasn't in a partner role, but was seeing a lot of great deal flow, wanted to do the same thing. And we all had like 3 friends that also wanted to angel invest. All of us knew like 2 founders, but we knew we needed to look at a lot more deals if we wanted to do good deals. And so we pulled together a group of like 10 women with different pockets of deal flow with that same goal of democratizing just like the information and the jargon understanding that goes on in angel investing and just demystifying it. And then like pooling together our access and sharing that with each other. And then that grew by word of mouth for like 3 years to the point where it's now 4 years old and now over 100 members. But 3 years in, we decided to launch the venture fund because at that point, we were seeing like 1,000 deals a year from this angel community alone, and then my personal network, and had seen a lot of successful companies come in and pitch us, and then like end up getting capital from Lightspeed and other bigger firms afterward at worse terms than what we were able to invest at. So that was an indicator like something special is happening here. And the reason we kept it was that as I went full time into this venture fund, I knew that I have these really strong networks from like Cruise and Snap and Apple where I've worked in the past, and ex-coworkers will leave and start companies when they've had a liquidity event. But my own personal network is static. So yes, it grows, but not at the same rate as it can if you have a team of like 100 angel investors who are also working at full-time companies, seeing opportunities and seeing their top coworkers spin out and found companies. It's kind of like we have eyes and ears on the ground at all these incredible companies. So that was the reason we kept it around from a business perspective. But I think it's also just really important to me and my personal mission of democratizing access to capital, or to even just having the opportunity to invest.
Yeah, I think investing within a group is incredibly helpful. It's an educational experience. And again, like you said, it's like crowdsourcing deal flow as well, which is really interesting. All right, ladies, we've given the background. We've talked about kind of the setup and how it all works. Now let's hear about the work that you're all doing. You know what, Amber, you were just talking. Why don't you dive in and just tell us all about the Council Fund and what you got, what it's all about?
Yeah, absolutely. So at the Council Fund, we focus on software, B2B software that's built for legacy industries, and we try to invest as early as possible when these companies are worth $5 to $10 million. And then we tackle legacy industries because A, they're existential, B, they're operationally complex, and C, they're massive markets. So altogether, they comprise over 25% of the US GDP. I'm talking about areas like construction, logistics, healthcare, manufacturing, supply chain. That's really exciting to me because I spent my whole career interfacing with these industries while in operations leadership roles at different companies. And I'd be working at these like blockbuster name companies and using great tools like Notion and Slack, and then turn around and work with one of our partners on the supply chain side or something, and they'd be doing everything in spreadsheets and emails, and there was just a ton of room for human error, a lot of inefficiencies. And so that's been near and dear to me. I know there's a lot of problems in those areas that aren't being tackled. And I historically working in tech for the past decade, I've seen just the bulk of VC dollars and tech talent go flooding toward the core tech industry, but not funding all these other verticals that need to have technology applied to them. And so that's what we focus on at the Council Fund. And we're raising a $5 million fund, so it's fairly small. So we are able to take on individual investors in addition to large investors. And we've had LPs join where it's their first VC fund they've ever invested in, and they're working maybe at a Fortune 500 company or a startup that's had a liquidity event. Or we have, investors that are very sophisticated, like Bain Capital Ventures, which is like a multi-billion-dollar venture firm investing in the Council Fund for better deal flow. So we have the full gamut, and we've raised now 3 million of the fund. So we have a little bit less than 2 million to go. And we've already kind of reached our MVP size where we could close today and start just finish out the portfolio. But looking to bring on strategic partners ahead of fund 2, so leaving it open a little bit longer. We have invested in 17 companies to date, and we'll invest in 30 total over a 3-year deployment period, which means that LPs that invest in the fund get access to 30 companies. And then those companies have all been founded in different years, like 3 different years, which is nice because every year has kind of like a different flavor, if you will. It's like the year of telehealth, the year of AI, the year of Web3. We're not pivoting to all those different areas as they come, but they do change the market around us. And I like to have that diversification. And within the first 17 companies that we have invested in, we already have 4 breakouts. One of them has gone from 0 to now 5.5 million in ARR, about to raise their Series A. Another one we invested at pre-seed called Respell, and we invested at like an $8 million valuation, and then Craft Ventures came in 3 months later and led their seed round at a $20 million valuation. So we already have seen a markup there. Saw something similar on a company called Bounty, where we invested at pre-seed, and then M13 led their round at a 2.5 or maybe a 3x markup from where we had invested just a few months prior. And so we've seen that time and again in this portfolio. And then previous to this fund, I angel invested in 30 companies and had a 6.6 markup on that portfolio, and only one of those companies has failed to date. So yeah, that's a little bit
Pretty
about
good track record, Amber.
Yeah, I mean, it takes forever for the whole thing to mature. So
Right.
the track record is about 4 to 5 years old, and so it's 6.6 now. Ideally, it's still growing and still early, but it really takes 10 years to see the whole the returns come in. All of that is paper markups, except for a little bit that I was able to return in cash. So yeah.
That's fantastic. Gale, tell us all about Vitalize and what you guys are doing over there.
Sure. So Vitalize is a work tech fund. We look at 3 different things. The first is enterprise software that transforms workflows. It's a lot of what Amber mentioned. And the second is HR technology. The third is freelance infrastructure, because we're very bullish that the freelance part of our economy will continue to be very strong moving forward as people want flexibility. So we invest at the seed stage out of our fund and write checks of 250 to 750. So we have a $25 million fund too. And we have an angel network that does pre-seed deals alongside that. And those check writers can be non-accredited or accredited, as I mentioned, and write checks as low as $1,000. And those check sizes tend to be between $50,000 and $100,000. And we are closing our 13th and 14th of those right now. We do a lot to help our companies. So we have a small team. Our team has worked together for a long time. I've personally been in the industry for a little over a decade and have led 125 institutional deals, have a number of strong companies in the portfolio. But I think the most important thing for me to share is that I've made a lot of mistakes and I've learned from those mistakes. And it's kind of fun now that I have done a lot of good deals and a lot of bad deals, and really the process is working. So we have this small fund, 25 million, and we'll continue every 3 to 4 years to raise that size fund. We are not lead investors, we are co-investors, and we're very good at that. We tend to be one of the first calls that the lead investor has to bring work technology or future of work expertise to the table. We have a group of 30 plus CHROs, CPOs, and other future work experts that we meet with quarterly to gather insights from the wild that we then share with our founders. And also we use that to inform what we're looking to invest in as a fund. So we have a pretty good track record from fund 1. It's sitting at a 2x net. And then my SPVs are top 10% at a 3.5x net. And that is us in a nutshell. I am not technically raising, as I'm not a publicly listed fund, but we do have an opportunity if anybody wants to write a smaller check to take $20,000. We have one spot for a defaulted LP in our Chicago 3VC vehicle. And I think we'll be able to fill that pretty quickly. But if anybody out there wants to learn more about that opportunity, there is one $20,000 spot left.
Oh, fantastic. And for everybody watching, we have been dropping contact information, socials, and LinkedIn in the chat so that you can all follow along and continue to look into these incredible funds and the opportunity to invest with them. Tessa, tell us about Capitalize and what you guys are doing.
Yeah, of course. So I'm Tessa Flippin. I'm the founder and managing partner of Vitalize VC. I'm based in Chicago, along with Gale. And so Vitalize VC is a $10 million fund. We're investing in diverse founders. And when we say diverse, we really mean founders of color and really prioritize Black and Latino founders. And we're investing at the pre-seed stage at the intersection of e-commerce infrastructure and consumer brands. And so with our fund. It's a $10 million fund, and we are really looking to kind of invest into the future of commerce. And so the majority of our fund will be invested into things like Shopify competitors, payments infrastructure, advertising, marketing, creator economy tech, and even like, consumer brands at the end of the day as well. And so we're really looking to invest in anything that can help to scale an emerging brand. And then on the other side of our fund, we are investing, as I mentioned, in a small portion of consumer brands directly. And so we're going to be writing checks between 1 to 250K in this fund, really looking for 3 to 5% ownership in the companies that we invest in. And similar to Amber, we're going to be investing in about 30 companies in this fund, and we've currently invested in 6, and we're actually closing our 7th deal this week. And we have our next deal pretty much lined up for the end of the month. So hopefully by the end of this month, we'll be at 8 companies. And so, yeah, right now we have deployed about 655K out of the capital that we've raised. And so far we've raised 50% of our fund. So we actually are at about 5.5 million out of 10. We brought in Eli Lilly, which is our lead investor that came into a close earlier this year. And then we also have Bank of America as an LP. And then we have 2 family offices, a fund of funds, and then a bunch of individuals. And so we are a 506c fund. So we are fundraising. And yeah, our minimum commitment for individuals is 100K. And then for institutions, it's 250K. And then just a little bit more about our team. So I am a solo GP. So the only, full-time managing member of the fund, but we have a team of 5 part-time associates right now who are working with us on everything from deal sourcing through diligence and deal memos. And then we have an investment committee of 8 individuals who look at all of our deals and help me to ultimately make those decisions. And so we've got industry experts, we've got people with, investing backgrounds, as well as consumer brand backgrounds. And so we're super excited about what we're doing. And we would just love to have anybody on this call who's interested in having a deeper conversation reach out.
Fantastic. Lindsey, give us the background and information about what you're doing over at the Helm. You guys are all just so amazing at what you're doing. This is so fascinating.
Yeah, I founded the Helm in, again, late 2016, early 2017, after spending my career working in women's rights and being really disenchanted with philanthropy in particular, getting numbers back every year that said no matter how much philanthropic capital we poured into the space, we were moving in the wrong direction, and wanted to better understand what levers there were for creating systemic sustainable change for women, and creating a more equitable world. And feeling like, of the sort of feminist trifecta being political, social, and economic equality was always the last one to be sort of cultivated. And yet I think it's the gatekeeper of the other 2. And so went on a year-long listening tour to try and figure out what levers there were that were being underutilized, and was really blown away when I came across the realities of venture capital, which I'm sure if you're on the call, you're probably privy to. Less than 2% of all venture capital goes to women. And when I really started deconstructing what that meant for the way that the world is architected and who's benefiting from it, it just became so clear that that was my theory of change. And I wanted to create a firm that really challenged the status quo. So we did that with a small proof of concept fund in, again, I think was raised in 2017, deployed in 2018. We had some extraordinary companies in that vintage, including TIA, which I know a lot of people are familiar with. We were one of the very first checks into TIA. They raised $100 million Series B. They're going out for their Series C now. And so on the sort of back of the success of that fund, we're raising our second fund. We invest in early stage tech-enabled companies that are built and led by women. We are technically a generalist fund, and we feel very passionately about staying strong and wanting to build and compete with some of the biggest legacy funds that are in that space. I think it can be really gendered to try and make women narrow in if they don't want to in this space. We, as a general rule, even though we are technically generalist, have an emphasis on people and planet. So we do a lot of women's healthcare, and we do a lot in climate and sustainability. We do not typically invest in consumer product good companies or consumer and beauty, wellness, or parenthood, because we have found historically a lot of the capital that does go towards female founders often moves in that direction. And so we're really focused on industries and sectors with women at the helm who have been historically underrepresented and underfunded. The last thing I would mention is I think we've done a really great job of creating an inclusive portfolio, both for Fund 1 and for Fund 2. In Fund 1, I think it was 45% of all of the companies we invested in had at least one founder who identified as BIPOC. For Fund 2, I think we're somewhere between 35 and 40%. And we also have an incredibly diverse angel network and an incredibly diverse group of limited partners. And so I'm really proud of trying to sort of walk the walk on that front as well, and to really have that be core to everything that we do, not just so that it's feminist, but really an intersectional feminist lens on investing. So I think I will pause there and just say, if anyone wants more information, I'm happy to share our investment deck for our fund, our pitch deck for our fund, and then also our angel network, which does provide a lot of education for folks who are looking to delve more deeply into like, what is an LP? What is an angel? How do I know which one I am? What should I do? How do I develop an investment thesis? How do I diligence a company? So happy to share more.
Those educational components are so important. First of all, I have to applaud all of you. It's so hard what you're doing, and to be working in a male-dominated industry, and to be sitting in the seats that you're sitting in, and to be really leading the charge as fund managers, women fund managers, and the percentages on that are equally as small as they are on female founders. So, when it comes to funding, and that's why it's so important for us to have these conversations about investing in female fund managers and investing in female founders. We need to see more money going towards women. And, you guys obviously are incredibly smart, savvy, talented women who are really implementing change and making great decisions on behalf of your LPs every day. So thank you for the work that you're doing. And we really appreciate you all being here today and sharing with us all of the information that we have gained from you about investing as an angel, investing as an LP, the funds that you're running, the work that you're doing. I've been looking in the chat to see if we had any questions. We have a lot of compliments. Everybody's agreeing with me that you really are powerhouses. Thank you so much. So we just want to thank you all for your time and for your information. And to everybody watching, if you want more information about investing in any of these 4 funds, you can always reach out to Worth, and we'll get you in touch with them. We will share all of the contact information with you as well to make sure that you can get directly in contact with the funds that you're interested in investing in. And like we said, there are angel groups as well that you can participate in. Thank you, everybody, for attending. Thank you for being part of Leading Voices, and thank you for your energy and the work that you're doing. We appreciate everyone today, and we will see you all soon at the next Leading Voices.
Thanks for hosting us, Laura. Thank you.
Great job.
Thank you.